Hello, everyone. I have Steven Lubka, Vice President of Investor Relations for Nakamoto with me today. Steven, welcome to the show.
Hey, I'm thrilled to be here, my man. Good to see you. Good to chat.
Likewise. So we're recording this on Friday, August 15th. And yesterday, Nakamoto officially closed the merger with Kindly
Yes.
MD. So can you explain what changes now that the merger is complete? Is it fair to think of this as like really the starting line for Nakamoto?
Absolutely. That's completely right. This is really the starting line. And that doesn't mean this, that's not to say that we haven't been getting a lot done behind the scenes as this was ongoing. But there's so many key activities that we could not engage in until this is complete. We couldn't buy Bitcoin in most cases. We can't deploy capital in our strategy of investing in other treasury companies and so on. So we haven't been able to deploy capital. And we also haven't been able to talk with the market much. We haven't been able to announce things, say things, or have any sort of engagement. So this really is, I think, the starting line.
Yeah, I'm super excited about it. Can you elaborate on your general thesis with Bitcoin treasury companies? Because you've said before that you believe they're the Bitcoin banks of the future. Can you elaborate on what you mean by that?
Yeah, so I think that's 5 to 10 years out. That's kind of a long-term thesis that if you believe that Bitcoin becomes a major asset in the world, then you need financial institutions that are going to engage with it directly. They're going to hold the asset. They're going to issue products denominated, backed, or facilitated by the asset, that they're going to just do all the things. You need financial institutions to touch Bitcoin. And my base case is that most current financial institutions don't really have the DNA or the background to do so. So they're going to outsource that to specialists. And this is how most of finance works in the world today. It's not that every bank or every financial institution does everything themselves. So there will be Bitcoin specialists as Bitcoin integrates. And I do think that we're in the capitalization phase. So we're in this moment in time where these kind of future Bitcoin financial institutions, which I think are where the winners from the Treasury company wave end up, they're kind of being capitalized. They're having their balance sheets be capitalized now. And so that's kind of the long-term view. And the short-term view is that these are companies that can leverage public markets to deliver growth per share.
Yeah, how are you valuing them? Because some people view, they'll point out MNAV as, this Bitcoin treasury company has an MNAV that's way too high. Some will say, oh, MicroStrategy at a 1.5x MNAV is too low. And it's all seems to be kind of subjective. So is there any objective way to value these treasury companies because they are so new and I don't think anybody really understands them completely?
So in my opinion, that question is a lot saying, what is the correct price to earnings ratio for a company to trade at? And it's not something you can really answer. Like, people can make arguments. They could say, well, this company's growing faster, this company's growing slower, this company has more debt, or they have idiosyncratic risks. But at the end of the day, the precise ratio, the precise multiple that an equity trades at is ultimately set by the market and via broad and somewhat intangible perceptions by investors of like, what's the right, ultimately it's not, I don't even think it's that most investors are being like, no, I think it should be at a 35x PE ratio versus 32. I think it's really just driven by capital flows. It's driven by bids. And when more money comes into NVIDIA or more money comes into Palantir, the stock goes up. Palantir is a great example. It's trading at an enormous PE ratio right now. Why is that? Well, because people want to own it. They want to keep buying it. And they have intangibly optimistic views about its future. And so it's the same thing with MNAVs, right? There's not a right MNAV. There's no concrete way that you can be like, oh yeah, this should definitely be here or definitely be there. You can obviously index your view off a historical range. You can say, well, historically this was expensive and this was cheap, but that's not incredibly concrete, right? That's not super tangible. You're just saying that, like, based on the past, but I don't know how causal that is. So all that to say is like, I don't think you can do it concretely. There's no specific methodology that tells you what MNAV something should trade at. But that also doesn't mean that the MNAV is unjustified or inappropriate, right? I think there's a lot of people get into this discussion of like, why does it have a premium? It's obvious why it has a premium. It has a premium because they're able to use public market tools to grow Bitcoin per share. And these are tools, these are financial offerings, equity sales, debt sales that individuals can't access. So you're paying a premium to access leverage and to access other approaches that only can be done by a public company.
Right. That makes total sense to me because as a retail investor and individual, I can't do what Strategy does.
Correct.
And issue convertible notes at nearly 0% interest and buy a bunch of Bitcoin. So the public companies have access to a lot more tools than an everyday person. To what can you elaborate on Nakamoto's specific strategy? Because there's the MicroStrategy play, which is preferred equity, convertible notes, acquire as much Bitcoin as possible, and then Nakamoto has David Bailey and Tyler Evans, who were behind UTXO and MetaPlanet. And so where can investors kind of think about what Nakamoto will do to increase Bitcoin per share? Is it running the MetaPlanet playbook in different jurisdictions? Is it raising more money to buy Bitcoin, MicroStrategy style? Like, what's the overall approach going to be here?
Both. Yeah, definitely both. So we plan to operate a treasury company in the U.S. using, I'm sure eventually the full range of tools that MicroStrategy has used and others that are yet to come. So we will be, growing that main corporate balance sheet in a similar fashion. But we're also, yes, your other point was right. It's more MetaPlanets. And so our core thesis is that in every capital market in the world, and the world is large, these estimates are hard to get to, but think somewhere between the U.S. is 50 to 60% of total equities in the world, meaning the rest of the world in aggregate is a market roughly the size of the U.S. And so our thesis is in those markets, there is a ton of capital that cannot allocate outside of that market. In Japan, there are a ton of investors, there's a ton of funds that can't invest outside of Japan or wants to invest in Japan, or it's just very cumbersome to not invest in Japan. So there's a lot of siloed capital. And so we believe that every capital market has at least room for one local treasury company. There is at least one player that I think those markets will tolerate and will support and that can do well. Maybe there's more than one, but we think there's at least one. And so following on the success of UTXO, which has been the best performing hedge fund in the world across the last 5 or 6 years, really an incredible job. That was, Tyler and David. And, we plan to expand that strategy and run that strategy and try to rapidly scale up new treasury companies globally. There's a ton of markets that do not have them currently.
I mean, I would think there could be more than one Bitcoin treasury company per market. I mean, if you look at any other industry, you have ETFs with hundreds or thousands of different companies native to that industry. So maybe this is too optimistic of me, but I think you could easily see 2, 3, 4, 5 different MicroStrategies per capital market.
Oh, absolutely. I don't disagree. It's just you don't even have to believe that to bet on our strategy. You only have to believe that there's room for one, which I think is hard to argue against in a world where like these companies are sought after. But yeah, I mean, even in the U.S., like we're obviously betting that there's room for at least a few because we're one. And I think that's right. Like I think there will be a proliferation, and there will then be a consolidation. But even after that consolidation, it wouldn't surprise me to see at least a handful of these things in each market. That there's definitely room for a few, especially to the extent that these firms can I think, issue novel financial products, issue novel securities that are integrated, backed by Bitcoin.
Yeah, I think that's the killer app at the end of the day is different products that have Bitcoin exposure, but with different ranges of volatility or dividends,
Sure.
etc. Michael Saylor said in their recent Q2 earnings that Bitcoin treasury companies aren't competing with each other. We're competing with 20th century credit instruments. So how do you think about competition among Bitcoin treasury companies? Because in a way they're competing because there's only 21 million Bitcoin. But at the other hand, it's like if a new treasury company emerges and starts buying Bitcoin, it strengthens the balance sheet of other treasury companies. So how do you conceptualize this?
Yeah, so I think one has to acknowledge that both things are true. There is obviously a level of competition because in any moment in time, there's only X dollars that are allocating to these things. And if there's more than one, then, some people are choosing to buy this rather than that. And so like in a snapshot moment in time, there's obviously some level of competition. That doesn't mean that I'm saying that like the right mindset to have is a competitive mindset, or I think it's frankly a very supportive industry, and I think there is a real sense of like we're all in this together with Bitcoin, and that's backed by there is a reality though that the more companies do this, the more Bitcoin gets bought, the higher the price of Bitcoin goes, and that strengthens the balance sheet. And Michael Saylor has been a huge supporter of other companies following the playbook. He's wanted them to. And I think that's rational for him. I think it's rational for other companies. But I think especially in that kind of, I think in foreign markets, in distinct markets, there's definitely a level of competition as everyone's getting out of the gate. And everyone's trying to establish like who's going to be the market leader, right? Generally speaking, there appears to be one, and that doesn't mean there isn't room for 2 or 3 or 4 or what have you. But I think there's definitely still is a measure of that. But be it one that like I think these companies by and large are run and operated by or owned by people that really believe in Bitcoin and that like want to see it succeed and want to see this wave of vehicles, really positively impact Bitcoin and increase the value. And so I think there is definitely a different quality to it than like, Apple versus Microsoft or something like that.
Yeah, I think so too. And maybe I'm naive, but all of the Bitcoin treasury company executives I've either met in person or heard speak on a podcast, they all seem to be pretty much aligned on Bitcoin first. Like we want what's best for Bitcoin. And so that's very interesting to see. And you don't see that in other industries.
Totally. And that's one of the things I've been saying for a while, is that you don't get to really control whether or not treasury companies exist, right? I think there's really no pathway of Bitcoin adoption where this sort of securitization doesn't happen. It doesn't make sense to me that Bitcoin could succeed without this happening. So you don't get to choose whether or not they exist, but you do get to choose who's running them. Is it Bitcoiners or is it Wall Street? And so I think there's a real way that I have a strong preference that I do want people that are Bitcoin aligned that are running these firms. I think that actually is very material, and I think that's important.
Yeah, I agree. Speaking of Bitcoin alignment, one thing that a lot of Bitcoiners want from these treasury companies is proof of reserves. Some of them do it. Metaplanet and 21 are the two foremost examples, and then Strategy, they don't do it. What are your thoughts on proof of reserves?
Yeah, so I mean, I think it's something we would definitely consider. I don't know that we've made a decision on that yet. And, I like that Metaplanet did it. I also don't think it's like a big deal that Strategy hasn't, though. I think that's where I'd like, I think it can be... I think it can be something that's valuable to do. And I think you probably do see companies end up doing it. And I think that's good. Do I think it's this huge issue that MicroStrategy hasn't done that yet? No, I don't. I don't think that the coins aren't there. I don't think there's actually this scenario. But as far as like instilling Bitcoin values in the financial system and like propagating those values, it's something that I think I would easily support. That's not a company stance, and I can't make a statement for the company because we haven't made an official decision yet. But we're all Bitcoiners and understand why those questions get asked.
Right. To me, I don't think it's a big deal that strategy hasn't done it either, but I do think it would be a big deal if they did it, because I think the leader in Bitcoin treasuries doing that would signal to the rest of the market, hey, this is part of the playbook.
I think that's right. I mean, I think it would set a precedent. And I know they got asked a question about that on the last earnings call, and it definitely seemed like they're still considering, whether to do that.
Yeah, I think they're headed in that direction. I mean, I generally agree with your Bitcoin bank's thesis, and I think part of that would be, hey, these are the assets we have under management. Here's where they are. And I think even in the short term, it's a good way for certain companies to differentiate themselves from strategy because they're obviously the biggest. They have the most liquid market, most liquid options market. But if you're an emerging Bitcoin treasury company, how can you compete with them? Especially if you're American native and you're not in a different market, that's one way to do it.
The differentiation is going to be a big factor here as more of these companies come to market. I mean, there's going to be a real push eventually, I think, to differentiate yourself and to say like, hey, what is the value you bring that isn't like currently satisfied by existing players? I think I think it's key, and that can be stuff like what you're talking about of just like proof of reserves, but also business model, what you're doing, cost of capital. All of these things I think become very important.
How important is business model then, though? Because strategy, I mean, until they really went ham on the preferreds, their business model of business intelligence software was somewhat irrelevant. Does core business even matter when considering Bitcoin treasury companies?
So this is a good question, and I had this answer, I think, in a previous discussion where it was like, why didn't the miners become the treasury companies? And the reason is like the high level of CapEx, of capital expenditures, that you have to do to keep up the mining business. I think it was actually seen by the market as a negative versus like all the market really wanted was an acquisition vehicle. All they wanted was something that just acquired Bitcoin and didn't have these kind of constant ongoing liabilities in the forms of new machines and new facilities and so on. And so I think we're at a stage where the market has said very strongly that it doesn't really value the operating business so much. Now, we do value kind of cash flows in a way. And cash flow is definitely something we're thinking about with Nakamoto, especially cash flow that is synergized with Bitcoin. So cash flow that goes up when Bitcoin goes up. And we think that is important and a key distinction, and that the market will eventually care about this, that the successful companies will be the ones that can go and once they have this treasury years in the future, deploy it, synergize it with an operating business or some other return stream. So, that is where we see this ending up in the long term.
Yeah. Earning positive Bitcoin denominated cash flows is difficult because the price of Bitcoin is going up. And so your core business really has to be structured to ride those tailwinds. At Blockware, this is something we talk about a lot with our clients. You mentioned the struggling public mining companies. I totally agree, right? Because they're having to invest a lot of their resources into non-Bitcoin producing assets like transformers, land, physical infrastructure to house the machines versus, if they could fully just deploy into just the ASICs. It's like those things spit off Bitcoin. Those Bitcoin cash flows actually increase as the price of Bitcoin goes up. But not many businesses have that that property?
No, it has to be directly indexed to Bitcoin in some way where there is a tangible and direct relationship, for sure. It's not easy to do. And like, I think that's why these treasury companies are happening. That's why there's this monetization rush, this capitalization rush, because the best use of capital today is just buy Bitcoin. It's hard to outperform that.
What are your thoughts on the 4-year cycles? Are they over now that more institutional players are in the market? Bitcoin treasury companies may create kind of a passive bid into the asset?
Yeah, so as far as like the very stark high volatility, like up hundreds and hundreds of percent, and then a 70-80% decline, I just don't see it. And I know that's like people say this every time and they end up being close to wrong. And I know there's a kind of tremendous risk or intellectual risk in saying that this time will be different. But I really do think we've hit a level of institutional adoption, not just the treasury companies, but the ETFs and like the broad view on Bitcoin. And it's very challenging for me to imagine in the next 3 or 4 years that there's this 70 or 80% drawdown. It's just very, very difficult. And I think the only way you could get something like that is if it went absolutely parabolic first, which I also think like the odds are a little bit lower of that. It's like volatility has decreased. It's not just the downside volatility, it's the upside volatility. That's not me saying it won't do well, but is it going to go 10x higher this year? Like, I'm not sure. You know, I think the volatility has come down. But I think what replaces that is a more steady market. And the sort of market we've seen where if you look at the chart over the last last year or two, it's this kind of like stair step higher. It runs up and then it trades effectively sideways for 3 to 6 months. And then it runs up again. And it has a, great performance over the year or the 2 years. But most of the time it kind of wasn't moving except for like a band. And so could that be what the market looks like from here on out? I mean, it wouldn't surprise me.
Right. I've been saying the same thing. I think once the ETFs were created, that shifted the era from pre-institution to post-institution, and the market has behaved totally different since then. It has been this just oscillation between Bitcoin going up 30, 40, 50% and then trading sideways for a couple months. And to me, it makes sense because the new class of 2024, 2025 Bitcoiners, most of them come from TradFi. They're used to the S&P giving them 10, 15% on a good year. So if Bitcoin goes up 50%, it makes sense that they would rebalance their position, sell some, and then you see this period of distribution and consolidation.
And I think that discussion of like who is the new cohort, who is the new buyer, who is coming to the market. And I think you're right that it's been an institutionally led cycle through the ETFs, through the treasury companies. I think Bitcoin has clicked for people in finance and people in the business of managing money more so than ever before. I think that has been something that really took off this year. Subsequently, I think the retail engagement has been much lower. And I think we've been in a cycle that hasn't drawn in a large number of new retail investors. And so I think it's had a different shape to it. And I think that's been reflected in the shape of the market of just like it's being steadier, lower volatility. That doesn't mean you're not going to see other retail engagement. That doesn't mean that doesn't change ever. But I think that is the characteristic of like what we've been going through.
Do you think retail is finding their home in Bitcoin treasury companies? And, to kind of piggyback on that, one thing Mark Moss actually pointed this out to me this week is most of the Bitcoin treasury companies, they kind of topped out recently in June. And at the same time, that was actually the local bottom for ETH BTC. So is it perhaps, in the past cycles, the retail degens go to altcoins and now they're going to Bitcoin treasury companies or somewhere in between? How do you think about, the retail search for higher vol?
Yeah, so I think there has been some capital rotation. That's kind of what you're talking about. And that's something we've seen in previous market cycles where this goes up, then a cohort of people sell that, they buy this other thing. That goes up, they sell that, they buy the other thing. I've been expecting something, a rotation between treasury companies and Bitcoin. That makes a lot of sense to me, that you'd see a similar dynamic there, where people ride the treasury companies up, their higher volatility, higher return when they do well, and then they sell them at a certain point, buy Bitcoin, drives up Bitcoin, and then they rotate back. I do think we saw some of that capital, though, also rotate to the altcoin space, to the Ethereum treasury companies. So that is something that happened. But, in some ways it's kind of interesting where you could look at the treasury companies as almost like volatility transformers for Bitcoin, where they're actually lowering the volatility of Bitcoin while increasing their own volatility. So they're kind of exporting the volatility from Bitcoin to the treasury companies, which become the more volatile vehicle. Time will tell how true that is, but that's one way I've looked at it.
Yeah, conceptually that makes sense. I think Michael Saylor used the analogy of like a transformer, so you don't shock little Timmy using a hairdryer or something. It's like the Wall Street individuals don't want Bitcoin's 50% annual volatility. They don't want 30% drawdowns. They're okay with fewer drawdowns in exchange for less returns. And so I think I do kind of view treasury companies as that transformer. Hey, we'll strip some of the vol off of Bitcoin and we'll take it.
Yeah, and it then creates a thing where like people can hold more Bitcoin and they can size the allocation on their portfolio to a treasury company or something else, right? They can say, hey, this is where I want higher volatility. This is where I want greater risk to return. And I'm going to put this amount over here. And I actually can increase my Bitcoin position. I can hold more in it because it's less volatile now. And a Bitcoiner might hear that and be like, doesn't matter, 100% all in, My point is not that that's wrong. It's just that most people don't think that way. Most people are never going to think that way. The vast majority of people are not going to put 100% or 90% of their capital in a really highly volatile asset. So I think that volatility compressing a little bit for Bitcoin does actually increase the amount of capital that's willing to come over to that, which is good.
Yeah, it absolutely does. You mentioned before the kind of absence of retail in this market right now. Do you think part of that is macro driven? Like retail is effectively broke because inflation is so high, the cost of living is so high, and they don't have any extra capital to actually invest with?
I've heard this, but I don't buy it just because there's a strong retail thumbprint in traditional markets. I think they just haven't gotten pulled into Bitcoin too much this time. I think that event hasn't really happened. I do think there's some bifurcation, and I do think there's some like unit bias effect, and there's like, obviously like it's harder to convince people in a sense to buy a 6-figure asset, even though it's subdivisible. They don't understand that. They love tiny assets in terms of like unit bias. But I think I think they continue to be active. I think you continue to see a high level of speculation in retail favorite stocks in the stock market. I think the narrative for Bitcoin this year has been more institutional. I think that's kind of part of it, is the story that's been emerging has been institutional adoption via the ETFs, institutional engagement via the treasury companies, all these sort of integrations. And, it may just be that story hasn't connected as much with the retail audience.
Do you hate taxes and love Bitcoin? Well, do I have the product for you? New guidelines from the Big Beautiful Bill allow for Bitcoin miners to depreciate 100% of their hardware costs in year one. That means every dollar you spend on Bitcoin mining hardware, you can write off instantly. If you have $100,000 in income you want to offset, you can purchase $100,000 of Bitcoin mining hardware and offset it. Blockware makes Bitcoin mining accessible to everyone. You can purchase a Bitcoin miner hosted at one of our data centers, and we will operate it for you. You get to acquire Bitcoin every single day at a discount to the market price, while also receiving major tax benefits. For more information, click the link in the description or go to mining.blockwaresolutions.com/tax. Again, that's mining.blockwaresolutions.com/tax. One narrative that has kind of gone out of the window was the strategic Bitcoin reserve. At the start of the year, nobody was talking treasury companies. Everybody was talking SBR, Donald Trump smash buy. Do you think, something like that could still be on the horizon?
Absolutely. So I think we need to be very clear that the kind of sovereign regulatory landscape is the best it has ever been by like a massive margin, whether or not there's an SBR. Like the level of even in Bessent's soundbite, which he later retracted, basically, he's calling it 21st century digital gold. Like this is the Secretary of the Treasury calling Bitcoin 21st century digital gold. We just got 401ks just got opened up to own it. All of these kind of enforcement, Fed monitoring, like every month we're getting these major announcements that are improving the market structure, that are improving the regulatory regime. So like before I dive into specifically the SBR question, like I think we need to kind of set the framing that like we have continued to have massive and substantial improvements. Now, as far as, so obviously you had Bessent on TV and he said, no, we're not going to be buying that. Then later he said, we're committed to building up the reserve. And so then there's a ton of like linguistic analysis that has to take place of like, why did he say that? He said they're committed to acquiring. Well, what does acquiring mean? Does acquiring mean buying? Or is he just reiterating like confiscation? I think I understand why people go there, but I think that's a little bit of an uncharitable. The Treasury is exploring budget neutral strategies to acquire more Bitcoin. If all he meant was confiscating it from known criminal cases, what is there really for the Treasury to explore? What is there really to talk about it in this way? And like someone might respond to that and be like, well, that's the point. He's not speaking the truth. But I don't think that's the case. And I was actually, unfortunately, the Bessent soundbite happened while we were in the deep quiet period with the SEC, and I couldn't tweet for a couple days. But I was very much in the group chats like, I'm fading this. I think this is just him talking off the cuff. I think he's like literally being asked by the interviewer, hey, are you going to revalue $1 trillion of gold and buy Bitcoin? He's like, no, we're not buying. We're not revaluing it. We're not buying it. I heard his response is more like, no, we're not currently deploying $1 trillion or $100 billion into Bitcoin, but we do want to build up the reserve, and it is a story and is something that benefits the American people. And so that was kind of how I heard it at first, but further, like, that is not how the administration was delivering a policy pivot, like as like subtext in a Bessent Fox News interview. Like, that's not how they were announcing that something changed, I would bet, with like reasonably high confidence. I think it's just somebody talking off the cuff. And I know what that's like. I do a lot of interviews like this, and like you kind of just start talking, and sometimes you say things slightly different, or sometimes it comes out a certain way and it's like maybe not exactly what you meant. So I think there's still do I think that the US government is like right around the corner getting ready to plow 100 billion into Bitcoin? Like probably not. That's probably not like what happens next week or tomorrow. But do I think there's still, I think, an incredibly interesting and fruitful landscape for engagement and with the administration by the Bitcoin industry over the next 3.5 years, right? Like, I think that's a very fruitful landscape, and we're really only 6 months in.
Yeah, I think that's a rational take. He was definitely caught off guard by that question. It was good to see him, kind of save face the next day on X. And I actually think
that's even the larger signal, to be clear. I'm sorry to interrupt you, but so we've had him tweeting in under 12 hours, maybe under 8 hours, and retracting it actually tells you a lot more about how important the Bitcoiner view and base is to this administration, right? Like, that's such a signal.
Yeah, it absolutely is. And, you got to think that they don't want to FUD their own bags either, because I'm sure they all hold Bitcoin on a personal level. Trump's company owns Bitcoin. JD Vance owns Bitcoin. The entire C-suite of the U.S. government holds Bitcoin. So I think, it was probably a misspeak there. He's a politician, so he's got to give kind of a non-rock the boat type answer, and he obviously can't say, we're going to dump all our gold and just buy Bitcoin. So it was a good signal to see. And I think we're really seeing, I think Bitcoin treasury companies are in some way a manifestation of this friendlier regulation and administration. Like, to me, it's not a coincidence that the number of public companies with Bitcoin has tripled since Trump came into office.
Absolutely. No, they benefit from a friendlier regulatory regime, and you have a much better landscape to say, hey, we want to deploy institutional levels of capital into this asset class in a public structure, right? If all of the capital is like deeply concerned about like a regulatory crackdown, like it's a lot harder to raise $1 billion to buy Bitcoin. You know what I mean? And I actually, I think the interest in the asset class, I mean, I've heard people say this of like, oh, well, these administrators or these officials are kind of like interested in like pumping their own bags. They're buying it and they're going to drive it up. I actually think that the larger story here is just how broad the Bitcoin community has gotten and how loud of a political voice Bitcoiners have been able to cultivate. I think that's probably the larger story, is rather than any personal financial incentive, like a direct financial incentive, I think there's a way that like Bitcoiners matter. This community matters, and they sit at an intersection of a pretty sizable number of people with a pretty considerable amount of resources. And I do think that's more of what we're seeing. This is a personal, like just a personal view and a personal comment. But I think I think the Bitcoiner voice had a tremendous amount of impact in the election. And I think nobody's going to make the same mistake twice in ignoring that going forward.
Yeah, I totally agree. And that trend's only going to increase going forward because the price of Bitcoin is going to go up. Bitcoiners are going to become wealthier, and we're going to have more resources to become politically engaged with. And so our power as kind of a voter bloc or power force within the broader political sphere is going to increase.
And it's this example of like in kind of like an intransigent minority. It's not like there's a decent number of people. They're now well resourced. They're also well coordinated at this point. They're connected. But they also care tremendously about one issue. And in a democracy like ours, that is how it works, right? The way modern democracies function is the interests, right? Like the smaller, motivated, very like inflexible groups often have outsized impact on the political landscape. And that's not a bad thing at all. That's like, if a small organized resource group can't raise awareness of the issues they care about, then there's really kind of a problem with the democratic system that you're looking at, like it's, how else are you supposed to have a voice? So a little bit of a tangent there, but I do think that like between the level of drive motivation, the specifically tailored issues that Bitcoiners care about, the number of Bitcoiners and the amount of resources they have, you really do have a potent political group.
Yeah, 100%. And I could just see that and feel that energy at Bitcoin Vegas this year.
Yeah.
Everybody's aligned. We're all on the same mission. The numbers are growing. For Bitcoin 2023 in Miami, it was like 15,000 people, and more than double that this year. So our resources are expanding, and our human capital, more importantly, is growing.
It's a journey, and it's a very interesting group of people. I reflect on this frequently. I find the social cohort, the community of Bitcoiners, to be one of the most fascinating parts of the whole thing. It's incredible who it has brought together. Because my high level view is that the group of people that are connected via Bitcoin would not have been connected otherwise. They're not ideologically homogenous. It's not of course, these people were always going to find each other. They all like this one weird thing. And so it's just a group of people that like this one weird thing. I completely disagree that that's what Bitcoin is. I think it's a radically divergent group of people that have radically different views on things that have only been brought together because of Bitcoin.
Yeah, I definitely agree. I don't know where the stereotype of all Bitcoiners are carnivore, weightlifting, Sun Maxis came from, because in my experience, there's some of those types of people. I think you and I are both in that category to some extent, but Bitcoiners are incredibly diverse. Diversity gets way overused in my opinion, but it really is an incredibly diverse group of people. We just all seem to be the ones who actually studied money and what money is, and we figured out, hey, this Bitcoin thing is actually a superior monetary technology, and because money is such a nucleus for human society, we've been able to bond over this one thing, even if we may disagree on everything else.
Yeah, in many ways, what it did was it networked together a very idiosyncratic group of people who, among many other things, needed to share a couple traits, the chief of which being that they were willing to hold a contrarian view for a long amount of time while betting a substantial amount of their net worth on it, right? That is, I think, generally a trait that almost all Bitcoiners share, is they're comfortable doing something that everyone else believes is wrong and that they're incorrect about and that is out of consensus, and actually putting their money where their mouth is. They're not just holding a fringe view, they're betting on it. And they're sustaining this contrarian bet for years and years and years, even during very hard times where it doesn't look good. And then it took that group of people that share this trait, that are high in this trait, and then it gave them a ton of resources, right? That's what it did. And that's a very interesting cohort.
Yeah, that was well said. Do you think a similar thing will occur for Bitcoin Treasury company proponents? Because to me, it still seems to be non-contrarian. I think well over 50% of people, at least on Bitcoin X, don't understand what it is that Bitcoin Treasury companies are doing and why this is so important. Would you agree?
I think it's a contrarian bet still. I think most people have no idea what it is or what's going on, and it is still a contrarian bet. Will this, how will this turn out? What will the end game be? How will it function? And I think I came into contact with this when I took my new role at Nakamoto, because I talked with maybe 50 to 80 Bitcoiners in the month that followed it, both online and in person. I was in the Bitcoin Policy Institute summit in DC. And so I talked with maybe 50 or 80 people, most of which work in the industry. They're really engaged in Bitcoin, as a full-time pursuit. Not that you have to work in the industry to do that, but just to kind of set the stage of who these people are. And I was shocked that almost nobody was extremely bullish, constructive on treasury companies. Very, very few people were oh yeah, I'm so bullish this thing. I've invested a bunch of money. Let's go. That was not at all the response. And if you think of this cohort of Bitcoiners, I mean, they should be patient zero for understanding this idea, for making sense of it, right? They're the ones that have They're familiar enough with Bitcoin. They're financially educated. They're close enough. They've been watching MicroStrategy for multiple years. If anyone's going to get this, it's them. And I don't think it's there yet, which means it's certainly not anywhere beyond there yet. So I think it is still a contrarian bet, and I think I think it's early too. I think that's a very reasonable stance, because if you want to break down the argument, okay, you had MicroStrategy, but MicroStrategy as itself created the category. It created the very framework. It's not until you have kind of the first follower, it's not until you see someone else do it that you actually realize there's a thing here. Oh, wait, this isn't just like a one-off with Michael Saylor. And so I think Metaplanet was that. Metaplanet was the first repetition or replication. And again, you didn't know that Metaplanet was going to succeed until it really did. It took a little while. And then shortly after that, you have Smarter Web, you have Blockchain Group, you have some of these other UTXO portfolio companies, but some of these other treasury companies that do very well. And I would say it's like the market only realized there was like a trend here maybe in December or January of 2025. And so I just really don't think this was a thing before then. There was not a proliferation. Further, while you've seen a lot of announcements for these treasury companies, very few of them have bought yet. And if you add up all of the treasury companies that are like truly treasury companies, so I don't just mean companies with Bitcoin on the balance sheet, but if you go on bitcointreasuries.net and you look at the ones that are actually treasury companies, they're not Tesla, for example. Like Tesla's on the list, but Tesla's not a treasury company. There's a lot of miners on the list, but the miners aren't treasury companies. And you add up like the top 60, or like the specifically whichever treasury companies are in the top 60 on Bitcoin treasuries, which includes many non-treasury companies. They have like a total of like 60,000 coins that they've bought. Like that's less than the Galaxy seller. Like the Galaxy seller, one person sold more than that in like a week, impacting the price like 1 or 2%. So they haven't, this trend hasn't been around very long. They haven't bought very much Bitcoin. It's not like they've like reached this massive scale. And so many of these big deals that we've heard about in the recent history haven't even bought yet. They're not even through the SEC. Like, you know, we only got through the SEC yesterday. You know, and many of the other large kind of SPAC RTO deals that you've heard about, they're not through yet. They're not in market. And so like, it's a very strange concept to think of that as like a late stage trend. Like there's no way that I can look at it where I just see it as like a relatively early, novel and new thing.
Yeah, that was eloquently said. I mean, Nakamoto, who's literally going to be at the center of this trend, went officially public yesterday. So, of course, we're not towards the late stage. That's what doesn't make sense to me with the critics, because they're like, oh, Bitcoin treasury companies are going to cause this in the next bear market. It's like, well, I think first they really need to set the price a lot higher.
Yeah, exactly. That's I've made this comment before, so apologies to people that have watched a few of my podcasts recently, but it's the critics are actually giant bulls in that view. For you to believe that the treasury companies are going to cause like this parabolic or this massive decline because they got over levered, you're actually saying they're going to buy like an order of magnitude more coins than they have currently, because they'd have to get that big to even have a problem. So if that's your like bear thesis, like you're actually kind of a bull in the short term. You actually think this goes way higher first.
Right. One thing people point to when they're evaluating which of these companies they might want to buy is some people say, a smaller company with a little bit of Bitcoin is able to increase their Bitcoin per share at a faster rate. Therefore, those are better plays. But on the other hand, the larger companies with a lot of Bitcoin, they're well capitalized. They may be able to raise even more capital kind of at an exponential scale. What are your thoughts on that?
So when you're looking at the smaller companies, they're generally, sorry about that, they're generally trading at higher MNAVs. They have a lower base. Ultimately, investment returns depend on where you're investing at. Like, where did you take a position? If you take a position in a treasury company and you pay the value today, and then they triple their Bitcoin per share over the next 3 months, like, that's more valuable to you than going up 10% over that same time frame. There may be a greater dollar denominated return on the one that went up 10% at much greater size, but you also paid a much higher price. Like, your valuation starting point was generally higher. And so, like, I mean, we're just talking about that small things can grow quicker. It's like financial gravity, right? And as long as the price you're paying for that asset is commensurate with that size and growth, then I think it is true that it's easier to go from that small starting point. And there's kind of there's different things you can do. Now, obviously, the larger ones are getting way more coins. They're adding like a way greater like dollar denominated gain and dollar denominated value, and like that matters too. And they have benefits of scale and size, and it determines like what financial products they can issue and how many people are going to trust their debt. And like it's not that there's benefits for sure. But do I think that you can launch a brand new treasury company in a novel market and experience faster growth? I mean, almost certainly, yes. It's hard for me to understand the argument of like, if you have like a first mover that goes live in India, why is that company starting with 100 coins and you're paying a valuation based on that not going to be able to grow faster and more accretively? It's hard for me to think that that's not the case. There's a lot of idiosyncratic factors, but size and speed do matter in different and ways.
Yeah, I think that was well said. I've got two more questions for you. One is, what could, I'm on board that I don't think we get another massive 75% drawdown bear market, but what could treasury companies do to position themselves conservatively in anticipation of a bear market? Because I think all these things are going to make money during a bull market, but how can they, secure themselves in case a winter does come?
So, it's a great question. You have to be prepared for it. So there's two major variables. One is not to be over levered, right? You need to not have short-term leverage or really high amounts of leverage as the market goes into a decline at whatever point it might do that to whatever degree, right? Like, you need non-callable leverage, and ideally you need to be levered appropriately. And the second thing that's be great to have is cash flow. If you do have an ability to generate cash flow, that gives you capital you can buy more Bitcoin with in the bear market, but which really that's just a proxy to say the ability to get more capital even when prices are down. The companies that can actually raise and deploy and access more capital in a declining market are going to outperform. They're going to do better. So I think it's like, one, don't be vulnerable to some sort of debt spiral or liquidation. That's probably the key thing. But two, can you get more capital? Can you raise capital? Do you have sources of capital that you can rely on even if the Bitcoin price is down a bit?
Yeah, that makes sense, because if the Bitcoin price is down, it may be more difficult to raise capital, but if you're a free cash flowing business, that will be less of a problem. My last question.
But also, so there's this thing like, the problem with Bitcoin bear markets is the loss of conviction and belief. It's people not just being like, oh man, the price is down. It's actually people being like, is it over? Is it ever going to come back? Because if you have conviction, it's a great time to buy. And so if you had some capital providers that actually had like long-term conviction in the Bitcoin thesis, they should love to provide capital at a lower price. And you could obviously structure, finance is a exploration of logic, really, of financial logic. It's kind of like engineering without the physics. And so there's a million ways to structure everything. And so could you get better could the person providing capital get better terms because they're providing capital at a lower price? Absolutely. That could be in their interest. And then it's in the interest of the Treasury company because you get to buy the dip and you get more Bitcoin, right? So as long as the market doesn't lose conviction in Bitcoin, which I think is more likely now. I think it's like, even if there were a correction, the amount of capital that's like, Bitcoin's here to stay, we want to buy the dip. I think that's a much larger cohort than in the past. And so it'd be interesting. And this is where you could see Treasury companies actually function as like a shock absorber and actually lower the volatility of Bitcoin, because if they're deploying capital into any sort of dip, they're supporting that. They're keeping a higher floor price. They're keeping a higher price for Bitcoin. And I don't think that's unreasonable to think that might happen.
Yeah, that makes sense. I mean, if you can raise capital during a bear market and buy the dip, that's going to be advantageous for everyone.
Yeah.
Yeah. Well, I got one more question for you. It's more of a lighthearted one. What's up with the bullfrog? I'm a fan. I think it's a great vibe. I'm gonna have to cop some merch, but can you explain what does this mean?
Yeah, so we wanted a mascot. We wanted a logo, but also a mascot. He's definitely our mascot. And so the bullfrog is a symbol of good fortune in many cultures around the world. It's a lucky kind of animal symbol, prosperity. But the bullfrog is also, and this is the American bullfrog, is the kind of the apex predator of their ecosystem, just like Bitcoin is the apex predator of money. And they they're very dynamic, they're very robust, and they also they kind of take over ecosystems. So they enter a new ecosystem and they rise to the top of that ecosystem. And we think there's kind of parallels with Bitcoin there. And it's also a nod to internet culture, right? It's a nod to I think frogs are pretty popular on the internet, and we wanted something that kind of threaded the roots of Bitcoin, but also with an institutional footprint. So we wanted something that could feel like an institutional mark or landscape, or kind of whatever you want to call it, logo, for like a real a financial institution, but also something that had a nod to Bitcoin's roots. And so I really liked it when obviously I'm not a designer and I wasn't involved in the design of that, so I saw it, for the first time a couple weeks ago or something, and I had my first reaction. I loved it. The thing I liked the most is I could imagine it like carved out of stone. Like I could imagine it like the lions in front of various institutional buildings. It's kind of regal. You could imagine a physical version, but I think it speaks to kind of where Bitcoin's come from, but also where it's going.
Yeah, I like that a lot. It's a fun backstory, and I'm a huge fan as well.
Yeah.
Steven, thank you for taking the time to come on the show. Do you have any parting words or anywhere you want to send the audience?
Yeah, no, I mean, follow us on Twitter. You follow Nakamoto. You can follow me, just Steven Lubka on Twitter. I think just kind of stay up to date, check out the merch store. And, I think there's a lot more to come. I like going off the just what we talked about in this episode. I really think this is early. I think, Bitcoiners have been staring down the existence of these companies for a while now. It feels kind of like old news. We've been aware of MicroStrategy forever, but that's just not where the market's at. The market is not, this is not old news. And I think it's, again, like my thesis has been like, as long as public companies have access to financial tools and liquidity that individuals don't, then there's a structural arbitrage that you can use those tools to greater effect, right? Like as long as a public company can get debt and can sell equity and can do these things that the individual cannot, there's an advantage to having the structure. So the treasury company bet is contingent on two things. One, that Bitcoin continues to go up generally, right? If Bitcoin doesn't continue to go up generally, there's a problem. Two, that public market structure continues to be bifurcated between what a publicly traded corporation can do and what a non-publicly traded corporation can do. And so as long as there's better liquidity, better terms, better offerings, then there's structural advantage. And so to think that this doesn't make sense in a sense, or doesn't have a sort of financial logic, you need to think that either Bitcoin isn't going to go up, or public companies are going to lose all special treatment in their access to vehicles. And I think that's not the case.
Yeah, I don't think any of those things are changing anytime soon. Bitcoin's
No.
going up forever. The dollar's losing value forever. And public companies are, of course, going to have more favorable capital advantages to private companies.
Yeah.
Yeah, well, thank you, Steven. I really appreciate you taking the time, and we'll see you soon.
Pleasure, Mitch. Great to see you, my man.